Hello traders, Gary Wagner here. Approximately 10:30 in Honolulu, 3:30 in New York. It is Tuesday, the 23rd day of October 2012, and this is the daily report for gold and silver. With outside pressures putting tremendous force on the markets today, we have sharply lower prices across the board in the precious metals markets. As you can see, 1706 and change, down $22 to $23, low 1703.10, high 1729.30. Silver also under extreme pressure, down about 80 cents on the day. As you can see, 31.65, low 31.47, high 32.47. Traders, there can be no doubt we should have zigged rather than zagged. In other words, we absolutely got into this long position early. Support at the 50% level, and that's what I was really looking at, was the possibility of it holding this particular support level and moving up. Did not, in fact, hold. We have outside bearish influences, a very, very strong US dollar, sharply lower crude oil prices, but you have technical selling. More than anything else, you have technical selling entering into the market. Now, typically, I might look at that support level. We've got our stops below 1703. Why? Well, the reason was we've got a major support level right in this area that we've talked about. Now go ahead and compress that chart so you can see where it's coming from. 1 second here. And as you can see, it is of the really longer of the two retracement points, starting here at around 1552, taking it up to just shy of 1800. And 1703 is a 38% retracement level. That's where we got that number from, and that's why we put our stop below that point. Now, if I felt there was a very, very strong likelihood that this area would hold, we had some sort of technical evidence, I would truly look to effectively dollar cost average and add to that position. That is not the case, because we right now have gotten really no confirming technical evidence. Should we get that, and should we not get stopped out? Because your stops below should be sitting below really 1700, 1698, 1696. I would say 96 would be a fair point to put it. If it cannot hold this particular level, well, there's really nowhere for it to go but to the next level. You've got 1674, and then 61% is 1645. Now, do I think it's going to go as low as 1645 or 1674? I can tell you this. My initial belief was that, and still is until proven otherwise, that this psychological support level, 1700, it's a critical level. And if in fact it holds, meaning it doesn't dip too far below and closes effectively above that, then I would look for this to be the, in essence, conclusion of this corrective wave. However, if it cannot, I believe in terms of downside potential, as I said, 1674, that's the first point, and then 1645. There's a couple other ways to look at this with other charts, and let's go ahead and do that now. Now, what we are looking at is simply a daily chart. It is in straight candlestick format. And as you can see, this is 1699. It corresponds to the 1703. Looking at a daily chart, it's a little bit different. But you can see that the market is pretty much at that point. If in fact we're correct, and what we're witnessing here is, in terms of a correction, this being wave 1, we're still in wave 2. And the question is, are we going to get this being the A, get our B up, and then our final C down? That's what I had anticipated originally. And the question is that in fact what will unfold? Is that in fact what is going to transpire? Because this was my basic belief. I thought that there'd be a good opportunity for it to hold, at least hold above, say, 1715 in that area. the market does what the market does. It absolutely has not. And now it's sitting butt up against this very, very critical 1700 mark. You can see 1699. If it holds, my belief is that in terms of this wave 2, the subcount again would be our A, our B, and then our final C wave down. I would look for that final C wave down. That could in fact threaten this 1634 area, 1640 area. That wouldn't surprise me. I am surprised though at the continued selling pressure that we're seeing as we count this subwave, that ABC correction. And just yet another way to look at this. This is also a daily chart. As you can see, 1708, this is continuous contract of the COMEX. 1703, you can see that the market touches at it and has closed slightly above that point. And as I said, my sense right now is that you've got some good historical data in which you can see here it's resistance. Here that price point is very supportive of that move. Here it just kind of moves through. Here it just kind of moves through. But we're sitting right now, and at least on a tentative basis, I'm hoping should be supportive. If not, it will stop us out, and I will look to re-enter the market, not on this counter B wave, but at the conclusion of the C wave, because that's going to really carry us in terms of a trade, a very, very effective trade that should capture that third impulse wave. And the last trade that really was super profitable for us was the first impulse wave. That's here. Right now, we're in 2. And then at the conclusion of 2, wherever that concludes, we will go, I believe, back into an impulse phase, an impulse wave. And that impulse wave, of course, should take us well above, first of all, this top. And that's what's most critical. And once it's above the top, whether or not it takes us out or challenges this record high, because this is wave 3, we'll have a 4 and a 5th, will be determined at a later point. But my sense is that in terms of the structure of what we're going to look at on a technical basis is what we'll see in the upcoming future. Traders, of course, silver is under the same pressure that we have currently seen in our gold market. And when we take a look at it, of course, percentage-wise, we tend to get a greater percentage gain on the upside and greater percentage loss on the downside. There's no doubt. It is also at a fairly critical level. This is a 50% retracement of this shorter Fibonacci retracement. And you can see that it begins, as we talked about yesterday, right in this area, just above 27, call it 27.5, up to this area, which is above 35, call it 35.5. This area should be supportive, and we have another small little area of support that falls in right under it. As you can see, this is an area where it was absolutely trading below that, could not, and it was definitively resistance. Again, traders, support and resistance to me are always going to be one and the same thing. So we simply need to see, we've got the FOMC meeting, which is begun today, is scheduled to terminate tomorrow with some sort of statement. I would imagine that the fact that we are so close to the election, the Fed is going to, A, not really want to shake anything up, B, seem political in any way, and C, most importantly, they initiated the most grandiose of monetary stimulus back last month, and if anything, we'll get some sort of a report as to how the economy's doing, that it's maybe picking up a little bit, and at the same time that they're not looking to change the monetary policy that they have. But of course, Fed watchers are going to be watching that extremely closely. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.